Tuesday, May 9th, market analysis, Stan Ehrlich. Good morning, 9:57, almost 10 o'clock California time, slightly past the middle of the day. The S&P 500 we start out with almost every day, and the stock market indexes, and we got some good stuff for commodities as well this morning, again. So we gapped down a little bit, about a point, give or take half a point or so, no big deal. Remember, yesterday we were up not much, but the day before, Friday, we're up a lot, and we left an island bottom behind, and you can see that on the right. Here's the daily data chart, and Thursday last week was isolated by a gap down and then a gap up. That is usually a very bullish formation. Almost always islands are one day, very rarely two, and I've seen very few that are three. Never four. So the point is, it's not happening so far. I'm not seeing any bullish follow through. Yesterday I was accepting because it didn't do much of anything, and this morning it's dipping back down and being very quiet and slipping about 1.5 points at the moment. Got a little bit below yesterday's low, around the middle of the range of the big up day on Friday, and that gap below the market could still be closed. Just because it's an island bottom at the moment does not mean it's going to stay that way forever, although historically, when you look back in time, that's exactly what happens. That's why I was expecting a lot of strength very quickly, which could still happen. Since the opening on the left-hand side here, gapping down, we didn't do much and then came up a little bit, and we've been going sideways all morning long on the 1-minute chart on the left. Let's take a look at the DIA. Story is extremely similar. The DIA has not gotten below yesterday's low, therefore an inside trading range day, because the high is also lower than yesterday's high. So the range is smaller and it's in the same or smaller range than yesterday. Okay, big deal. Down 30 cents, nothing happening. Does also have an island bottom or pseudo island bottom last Thursday. Potentially very bullish very quickly, but you can never make the market do what you want it to do. You always have to move with it. Sometimes patience is a virtue, blah, 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 blah. So that's the DIA, and let's take a look at the QQQs. And of course, they're going to be pretty similar, but they're slightly, well, they're a little higher than the opening, but they're slightly lower on the day, and they are also inside of the range of yesterday, like the DIA. Only Spider dipped a little bit below yesterday's lows. There is no pseudo island bottom in the Qs, but ladies and gentlemen, just yesterday and the day before, the Qs made new highs for the trend going all the way back to August 19th of 22. That's a substantial number of months. It's encroaching on a full year soon, a few more months. The point is, the markets, all of them bottomed out on October 13th, the bullish engulfing ER buy signal, and which is available, and everything started to head higher to one degree or another. The Qs have been the strongest, the fastest, the quickest, the best, held better on dips, higher, bigger percentage gains, blah, blah, blah. And the head and shoulder bottom of the Qs never had a problem. The first shoulder was in June of 22, and then, of course, the October lows. And then you have December, January's little tiny double bottom as the last shoulder. Up you go. The major breakout was January 20th. It dipped back down below the neckline only for a fraction of a day, and then off it ran, including some good signals along the way. All we need now is a move up above 335 on a closing basis, and you'll have new highs for over a year. And that's not very far away. Qs are doing the best, the fastest, the quickest, holding on dips the best, probably interest rate related. Okay, futures markets. Ta-da! S&P is same as the Spider, of course, with minor variations because of the time frame they trade in. Dipping a tiny bit today, no big deal so far. Next chart is interest rate futures and bonds and 10-year notes. The bonds here, US, is coming back to that support area. We'll see if it holds or not again. It's been like 6 times, something like that, in the last 2 months. That's pretty good. That's a significant support area. Now, the major resistance is what we're looking for, a close above, and that would be closing in the 134.5 plus range. That's going to be a major long-term bullish breakout, I'll bet. 10-year notes, and I'm waiting for a little bullish reversal. I'm trying to be on the bullish side and can justify it pretty easily. Higher highs over a significant amount of time, slightly higher highs, and also slightly higher lows. And this is the 2-year notes, or 10-year, I should say, sorry. And it's coming back to support like the bonds. They're very close to the same chart formation and same technical conditions, although this is not quite as close to support as the bonds. No big deal, though. Next chart. Crude. We know it punched through support, the last low in March, but it jumped right back up again, and this was last week in an oversold condition. So we're not surprised it's bouncing some. It might have stopped at that red zone, but it went through it a little bit yesterday, and today is an inside trading range, no higher, no lower than yesterday's range, a little bit lower net change, nothing going on. It could very well be topping out and starting to make new lows very soon, which is exactly what I expect. Next, heating oil. For all practical purposes, the same commentary. We're up against a lot of resistance. The trend is basically lower since last October, November. And we've gotten some great sell signals at major tops for quite a while in heating oil. So I'm bearish. I'm looking for a sell signal. I'm looking for new lows soon. Next, natural gas. Pretty much identical commentary. Minor adjustments, no big deal. Next, gold, silver, and platinum, then copper. So we picked the bottom in the market, and gold, silver, and copper, gold, silver, and platinum back in late February and early March. This was the first low in a little double bottom for the gold market on February 28th. Bingo. Up we went. Now it's having some troubles. It's chewing away at new high ground, but the last time we got there, we were overbought just last week. Trend is up, definitely. Support is holding on the average. That's pretty good. And we're making minor new highs lately. So intermediate neutral, might be building a top, can't tell quite yet, but I'm forced to be bullish because of the reasons I just gave you. Next chart is silver. Looks like it's developing a top. A lot more technical evidence here. So that's why I'm a little bit leery on gold. We have a double top formation with both of the highs being ER bearish, engulfing sell signals. The last one was only last Friday. Currently, we're around unchanged at the moment. We did make a minor low, lower than yesterday's low, but I want to get below the low of Friday and close below that, and then next close below the lows that would be below 2460 of the last few weeks. That would be the downside breakout on the double top, the lowest low between the two highs. So let's see what happens next. Bearish, looking for a break. Next, got overbought, had a bearish sell signal, worked out for a few days. This rally is a little bit more than I would have expected. We're not overbought yet, so there may be a little bit more room. Hey, it might turn itself into a double top. Neutral at the moment. Pretty much that's the best I can say. It looks like there's a little more evidence that it's topping out than anything else, but I got to see it start to show me the money. Next, high grade. Bullish engulfing, worked out really well last week. So far, yesterday been the highest high, and we have a little sideways range today, momentarily a little bit lower. I'm friendly. I'm looking for a little bit more of a rally up to say 4.0 or slightly higher because of that buy signal. But the overall trend is having some problems. It's really slightly lower ever since the early January top. So slightly friendly for the moment. Let's see how far this can carry. And I don't think it's going to be very far. And maybe in a month or two, we're going to see new lows. Could be even sooner, but I think this rally's got a little bit more. Next, soybeans. We got almost the bottom, lasted a couple days, good signal. Then it made a new low, or a lower low, that is, for the little move down in the last couple of months, but there was no downside follow through. So we bounced back up again. I'm neutral to bearish. It looks like this is rolling over from a major resistance area, to say the least, but we don't have any major downside breakouts yet. So big sideways with a bearish attitude. Next, got a turning point a few days ago, bullish engulfing buy signal, made some good money in the last couple of days. Now we're dipping down a little bit more than I would have expected, but it really doesn't change the overall picture. I'm slightly friendly still, wondering if yesterday's high wasn't the high for the moment, and the trend is down. The problem with buy signals is if they're not particularly profound or great in some way, shape, or form, accompanying something else like double bottoms or other formations, then they could be a little suspect because the trend is in the wrong direction. And you do get rallies in bear markets, like we've seen, well, what months now, including this great buy signal at the bottom of that one, but it was only a rally up to resistance. So a little skeptical, but slightly friendly for the moment. Tight stops. Next, meal. The buy signal yesterday didn't work. We have a small day trade loss, and that's about it. So the trend persists for the moment. I'm going to wait for other commentary because we're now oversold again, and maybe we'll get another buy signal another day or two, but it remains to be seen. So neutral, flat, no comment, soybean meal. This is corn. Corn, we had a great buy signal a couple days ago, last week. Looks like Wednesday last week, and it worked out fine for a couple of days. There was some decent money in there. Remember, the ER green and red signals originally built for swing trading, only a few days worth of move, if not less than that. But over time, and I'm talking many years, I've noticed that these signals are occasionally whoppers. They are the major top or bottom for major multi-month, if not multiple year turning points. I can honestly tell you that this trading technique caught the high day in Berkshire Hathaway, the most expensive stock there is. $250,000, 300,000 a share, somewhere in there. I forgot. I haven't seen it for a while. Next chart. We got the bottom in wheat a few days ago. Been up every day since except today. We have a little downside retracement, and that's very typical. I don't see any problems here. Looking for a little more strength, but again, it's a bear trend. Again, you would normally expect it to stop rallying at resistance levels, and that's kind of what I think is going to happen, just like the buy signal that worked a little bit, March 24th. This one has worked past tense a little bit, and it was only a few days ago. So let's see where this goes. Basically bearish, but looking for a little bit more strength before we see a downturn to new lows. Or maybe that was it yesterday. I'm not sure yet. Next, live cattle. Bearish, starting to make lower lows and lower highs. We had a sell signal right close to the top of the move. I don't see anything wrong with its little bounce back. Probably will stop rallying right in this ballpark range that's at right now and turn into modest new lows. But what is the major trend here? It is up, darn strong too, over a significant amount of time. Looks like in a general about a year. We did get a great buy signal at the last bullish turning point, almost the exact low at that point, oversold, yes. And we got a recent sell signal that worked okay. So I got to be bullish on this. The trend is up. The low last week was right at support. It's trying to make and did make a minor new high for a few days, but I don't have any overbought or oversold conditions at the moment to latch onto or talk about. Great buy signal on that minor low, profound as hell. Great sell signal on that sharp rally. That was a good sell signal for several days. Another good sell signal for several days. Actually, a bunch of good signals on live cattle. Next chart. Hogs. Today, First day, right now, new bullish engulfing buy signal. We didn't get very oversold. We just barely got oversold, but oversold's oversold. We have a bullish engulfing outside up day, therefore we're turning green. As long as the market closes higher than yesterday's close, the bullish engulfing will stay green and it's an official buy signal. Now we will want to buy it in the next couple of days on a minor retracement and start to see new highs after that. Let's see how this one pans out. It's a bear trend, so maybe it'll only work as well as the last one, which is a couple of weeks ago, and it worked out pretty darn well, including the ER3 entry the next day after the green. New signal, follow it. Next, OJ, slam dunk, but oversold, and now coming back into that old pennant formation. I think it's about ready to turn back up. It might just get a little bit lower, and that would be around 242. I like what I'm looking at for potential buy signals. Oversold, couple of very big down days, probably overdid it. Coming into support, trend is still in my favor on the upside. Looking for buy signals, I'm friendly. Next, Cocoa. New high close seems likely, not overbought yet. Looking for higher levels. Next, let's see how high here real quick. Oh, this is the problem child. We are up in rarefied air. This is extremely high priced historically. And 4 previous occasions when we were in this price range around 3,000, it topped out. Very unfortunately, I didn't get any sell signals out those 4 highs, but all of them were overbought, like now or a few days ago. We got some other good signals, bottom there, a couple of good sell signals there, great sell signal there, great sell signal there, and then back earlier. But right now, I would be looking more for sell signals at this major historical resistance. Next chart. This is sugar. Too bullish, too fast, too much. Maybe a minor top forming. We'll see how this develops. No comment. And we're back to the E-mini. Currently, we're down 150 on the Spider. No big deal. 40 cents lower on the DIA. $1.50, about the same as the Spider, lower on the QQQs. Nothing going on of any major consequence. You know what I talked about at the beginning of this. That's it. Thanks for listening and watching. Tomorrow, bye.